What's up, Modern Lending podcasters? Buckle up. We're going at episode 5 right now. I'm bringing in Milton Manolis, and we are going to absolutely unpack and transform your business with the world of renovation loans. Guys, you are missing the boat if you're not focusing on how this product, conventional, FHA, and VA renovation, can transform your business. We're dropping golden nuggets from the sky all day long. Here we go. Let's kick it off with Milton. All right, everybody, here we are, another episode of the Modeling Podcast, and like I said in the introduction, I'm here with Milton. This is going to be epic because, you know, for those of you that have followed several of the podcasts, thank you, by the way. Thank you for subscribing. Thank you for listening. Thank you for sharing. Appreciate the love. You know, this is a fun topic today, renovation. Renovation's a fun topic. It's a scary topic for some people. It is. But it's really a game changer in the industry on how you use it, on how you save transactions with it. And so when I was kind of thinking of who I wanted to bring on the podcast, Milton, you were like right on the top.
Oh, thank you.
Because you're running our renovation platform nationally, and you're out there spreading the good word. You're doing seminars all across the country. You know, you're really educating people on the power of renovation loans. And so let's bring it to the podcast. Let's bring it to everyone out there who's listening and say, why aren't you using this incredible tool to grow your business? And so before we get into the tactics and what you're doing with it, let's give everybody some of your background. Like, where'd you come from? How'd you get into the crazy mortgage world? Like, what's going on?
So, yes, thank you for having me.
Of course.
Alec. It's very lucky to be here. But so born and raised on the south side of Chicago.
Sorry about that.
Well, listen, you know, and I try to hide that accent, right?
No, bring it out, dude. Let it flow.
Oh, my goodness. When I do these realtor events, you know, I tell them, try and guess where I'm from. And they in the beginning they picked it up right away, you know. So as we went on and they had a harder time figuring out it was Chicago, then I knew I was doing it right, because I'm trying to, like, you know. But you know, basically born and raised south side of Chicago, and I started very young. I entered the financial markets, and I was a stockbroker at the age of 19.
What made you do that?
So I always loved numbers.
Yeah.
And I always loved to research, and that's what I was doing when I was a little kid.
So you're like stockbroker.
Yeah, that's it. And I had some friends that got into it.
Yeah.
So I got sponsored, became a broker, loved it, had a blast.
But you say you were the youngest?
I was the youngest Series 7.
Dude, that's awesome.
Yeah, for about, I think it was about 6 months or so.
Before some other young
before some, right, exactly. But it was a different business back then, right? It wasn't so much asset management or money management as it is now, right? You were more doing that research, making those recommendations, and that took a toll on me after probably 5-6 years.
Yeah.
You know, I had to bow out. It was just way too stressful.
The doctor said,
right,
you got to get out of the stress.
Yeah, the doctor told me you need to change jobs. The stress is just doing you in. And so I had a buddy of mine in the mortgage business.
Oh my God!
And I thought,
so what stress could there possibly be?
Exactly
in the mortgage business.
That's what and that was back in the mid '90s. I'm like, so
yes.
You're just calling people and helping them save money.
Yeah,
and he's like, yeah. I'm like, well, how stressful could that be? I'm in, and that's how it started. So that's how I got into the business, and I loved it because, you know, it was great to be able to interact with people and really help them save some money. And I really had no reluctance. I understood how to overcome objections. And
that's probably because you're trained as the stockbroker.
Right.
It probably gave you a big leg up when you came into mortgage and like, hey, call these realtors. You're like, no problem.
Yeah, exactly. It didn't matter. I didn't know anything.
I'm hiding in the corner, like, can't handle it. But you're just like, yeah, let's bang the phones.
Yeah, all night. That's my first night there. That's all. I took like 5 apps. The first night I knew nothing. And I just picked up the phone and started telling people what they could say.
Everyone out there's like, I hate this guy. First day of the business, like, took 5 apps, doesn't know a thing.
Right. But that's how I cut my teeth. So
well, so how did this end up? Man, you really have a passion for renovation.
Yes.
So how did your career go in that route?
You know, so I'll tell you, it's one of the things I learned early on is you need to have some type of unique selling proposition, right?
Yeah, some kind of niche, yeah.
Right. And so I would say back in 2004-ish, so right around there, 2004, being in Chicago, there was a lot of competition.
Oof,
right?
I remember.
Yeah, it was the heyday, and I needed something to separate myself.
Yeah.
So I went to a HUD workshop, and I thought, okay, let me go to this 8-hour HUD workshop and see what they're teaching everybody about 203Ks, right? And saying, hey, is this something that could that could give me that edge. So I went there and I spent all day there, and it was, brutal. But
8-hour HUD workshop.
Right, yeah.
Sounds thrilling.
Right. So by like the fifth hour or so, they started calculating the loan amount and how you calculate the loan amount.
Yeah.
And in that little nugget is where I found what I believed would give me the edge I needed, right? What I needed the talking point that would bring value to my realtors and to my clients. And so that's what I ran with.
Well, see, Milton, I love this only because, too, the parallel to today is so relevant.
Right.
Competition is massive today, just as it was in the pre-crisis days. There's loan officers out there everywhere looking for a niche, and they're coming up with taglines and slogans and trying to figure out how to differentiate themselves. And so the same process you went through, people are going through right now. And so when you found this niche, how did you play it?
Yeah, so basically the first thing I did is I went to my agents and basically started talking to them about that value prop, not as a lead, but as in the beginning as a backup, right? Because even myself, I was a little, I wasn't sure how exactly it would work. So I wouldn't lead with a 203K, but I would let them know that it's a great insurance policy, right? Because even back then, you had issues coming back on appraisals with all these repairs and homes that were dated and people wanting to update or upgrade their homes. And so that's what I used it as a tool first to get me in the door and bring value to them that other people are not bringing.
So specific to the variance, is that because
correct?
Okay, so let's break this down. Let's go peel the door back and really get in there. So you discovered in a HUD workshop that there's a variance to LTV.
That is correct.
And so how does that function? How does that work? What's the guideline?
So back in the day when they were putting this program together, they basically, one of the brilliant things that they decided was they knew that not everything a customer would do to a home would give them dollar for dollar value, right? The home is supposed to have a good roof and windows and siding and whatnot. Yep. So they said, okay, well, let's give them a little cushion there. Let's give them a 10% cushion. And so
we're talking specific to FHA.
203K, that is correct.
203K right now. Good. Because there's a lot of the renovation programs we're going to get into. But they allow an LTV variance. How does it work?
So basically, they'll let you go to 110% of the subject to value. Now, technically, it's 96.5 of 110, right? Because that's how you calculate the FHA base loan limit. But for purposes of our conversation, you can go to 110% of the appraised value.
Yeah, people today don't even know that.
Right.
Like, people that are listening right now are like, what did he just say?
Right.
Like, they don't realize that with a 203K, you can lend to 110% of the subject to value.
Correct.
That's a deal saver.
Exactly the point.
So this was your ace card.
That's right. So
you walked around with this.
That exactly. And so when I first heard it, I was like, wait, how does this work?
Epic.
And I started doing all the math, right? Because I love numbers, and I was running all these different scenarios. And then I started doing research on what exactly is a 203K appraisal. I mean, what is it? And it's a subject to appraisal.
Say, what is it? It's a subject to appraisal.
I mean, when the appraiser marks subject to, they're telling you what the future value is going to be based on the repairs that they called out.
Okay, so I want to hit this a different angle because I've heard you speak before, so I knew kind of what I was going to get into bringing you on here. But I love this because there are a lot of mortgage professionals out there, myself included, even when I was originating, who would get a subject to appraisal and be like, I got a mess on my hands. The seller probably doesn't want to fix this. What am I going to do? And it always was a mess. And your niche, your little card said, no, this is an opportunity.
Correct.
So did it work?
It worked wonderfully.
You built a bunch of relationships with this.
I did, yes, and still have one of my best relationships.
Awesome.
But it gave me the confidence and the power to go in and tell them, you can't really afford to work with anyone else. You have to work with me, right?
Yeah.
Because I'm not going to just, you're not going to just call on me when you have a problem, right? I need to
be your guy.
Exactly.
So did you get turn downs, or did you get in the beginning? Were you getting kind of people who had subject to and kind of didn't know what to do? They flip them over to you, or was this just a relationship building tool?
This was a relationship building tool. I did get turn downs, but that's not how I presented it. I really presented it as, look, this is the value proposition I bring to the relationship, right? You don't have to worry about your commission, okay? And the three things I tell them, even to this day, is how these loans protect their reputation, their customer, and their commission. So
I want to break that down because we do actually have real estate agents that listen, which is epic. So we want to share this with them and get them educated. But I want to kind of finish your storyline here in your career. So you went out, started to niche the 203K option,
Correct.
built your business up.
Correct.
And then, fast forward now, you're running, the national program for Loan Depot.
Correct.
How did that all happen?
So my just opportunities keep rising. You know what I mean? And when you get out there and listen, being in sales since I was a teenager, right? Yeah. The one thing I really enjoy more than selling myself is teaching others how to sell, and I take joy in seeing other people become successful because of something that I helped them do, right? Yeah. And so that's kind of what drives me. And so the leadership role for renovation, I think, just sort of evolved naturally because of that drive, you know, and I'm very blessed because of it. So.
Well, okay, so let's go behind the scenes on like the Milton presentations that you do. Like, let's get real down. Like let's just, for listeners out there, like, okay, now let's pretend you're part of the experience here.
Okay.
So I want to set up a couple things for you, and then we'll let you knock it down, because I think loan officers are missing an awesome opportunity with renovation. First of all, I think everybody understands in a lot of our core markets, we have inventory problems. Mm-hmm. There is not enough houses for sale. And I think that problem is going to continue to get worse in 2020. I think there's just not going to be enough inventory. Put that on the side. That's where renovation loans obviously comes in and plays a huge role.
Correct.
The average homeowner, statistically, depending on what you Google, is going to spend anywhere from $18,000 to $25,000 on their home in the first year.
Correct.
So all of a sudden now we have another opportunity, because it's like, well, where are you going to get that money? Are you going to put it on high-interest credit card? Do you have it saved up? Where? Because very easily could be a renovation loan. And so you kind of have all these opportunities like those bucketed around, and then you come into town to talk to everybody. What are the themes and messages that you hit in your presentation to 400 realtors in a hotel, lobby or whatever it is, hotel convention center thing?
Yes.
What are the key messages? And, the Cliff Notes version, because we don't have 4 hours to go into it. But what do you got?
So the first thing I'm going to say is exactly what you just said, right? So I have to let them know, and part of the thing they need to understand is that they do spend upwards of $25,000 in the first year and a half of buying a home.
Yeah.
But they do not communicate that to us. When they walk into a house.
When you say us, you mean the loan officer.
Loan officer and their realtor partner, right? So when the real estate agent is showing them a home and they walk in and they look at a kitchen from the 60s, they're just going to turn to the agent and say, I don't like the house. But it's really because they're thinking about, where's that money going to come from?
Yeah.
Okay. And they're not going to tell us as the loan officer. They're not going to share that with the agent, but that's part of their decision process.
Yep.
Once they understand that, then we can incorporate that into a successful transaction. So what we talk about is how to identify those and how to let them know that up front that they have that option. They may not use the option, but renovation loans not only help you convert these transactions and help you, go from a crisis to a commission, saving these transactions.
Yeah.
But, people need to stop looking for the perfect house. One of the things I talk about, Alec, is all the HGTV shows, right?
Oh, they're huge.
Yeah, and everybody sees them and they think that's what I want, and that does not exist.
No.
Okay,
it's a make-believe TV show.
Thank you. Right, so we need to tell them up front.
Have you seen the memes on the shows though?
Yeah, it's pretty.
Where the one guy's like, "I'm a butterfly collector," and the other one's like, "I fold paper airplanes, and our budget's $2.5 million." Right?
Yes,
it's amazing.
Yes. Yeah, so
it's not real, people.
So we have to prep them and control that perception, right? And so that's some of the things that we talk about. We go heavy into scripting as well.
Well, so I want to hear some scripts. I know some loan officers want to hear some scripts,
right?
But I think what I'm hearing from you is the first step is just you have to educate the realtor and the homeowner what questions to ask. Correct. And the real estate and the mortgage guy,
right?
What questions to ask?
Correct.
Like, are you going to do any improvements on your home?
Correct.
During the 1003 process, I feel like some of our consultants out there in the mortgage industry are just so quick to fill out the 1003, as opposed to asking the real questions about what is important to that home buyer, and they miss out on
Correct.
Providing them all of the options that they should.
Yeah, I mean, doing exactly what you said usually converts them quicker, right? Everybody's had those customers that have a difficult time finding something, and that's because they're looking for the perfect house. And 3 months later, 10 pre-approvals later, they're not finding or buying or getting into a contract. They're frustrated, and then they exit the game. They'll say, we're out. We're just too frustrated. We can't find anything.
So I got to share this because you helped pioneer something with me here at Loan Depot that I thought was really cool, which was the open house kind of what was it? Design studio.
Correct.
Remember this?
Yeah, yes.
Okay, so this is rad. If anyone out there is trying to get creative, we all know that when you're out there looking at open houses and looking at your community, there's some houses that need some love.
Correct.
And so when a home buyer walks in, the first thing they think is, too much work or need some love or I don't have the money or whatever they think, and they walk out. but they really want to be in that school district. They really want to be in that neighborhood, whatever the reason. The design studio that you helped me pioneer was this really cool concept where you would like in the kitchen, we'd put up a little pop-up and it would have kitchen tiles, kind of like if you walk into Home Depot, like a tile sampling,
Correct.
Paint sampling, appliance brochures, and each room could have a different little kit, bathroom, kitchen, master, that would showcase kind of options. So almost like you're walking through a new construction home.
Exactly
and
where
you're
it
in a
came
design
from.
studio.
Yes.
We're putting these in open houses, actual open houses across the country, and that starts the conversation. Because someone walks in and goes, "What's this doing here?" "Oh, I can have new cabinets." As opposed to, "I don't like the 70s stuff that's here."
Yeah, and that conversation springs from, part of the conversation with these customers, pick your upgrades. Don't say, it's not always about construction and renovation and rehab. It can be something as simple as upgrades. You want to upgrade your cabinets, your countertops, just like you said, on new construction, so they can go in and pick those upgrades, and then we'll
So let's drop them some scripts.
Okay.
What should a loan officer or real estate professional be asking? What are the scripts to talk to customers with?
So initially at pre-approval, probably the most important script. It's
at pre-approval.
At pre-approval.
I'm trying to hit the point. Yeah. At pre-approval.
Right.
Okay.
When you're delivering that pre-approval, guys,
yes,
you're giving it to that customer, it's just one sentence, and it's quite simple. And I say it to every. It doesn't matter if they're a renovation loan now or not. Obviously, they're not. You're giving them the script. You're just prepping them, and you're saying, Mr. and Mrs. Jones, congratulations. Here's your pre-approval.
Yep.
If you find a house and it needs a little bit of work, or you want to update something, no problem. Let me know. We can roll in the extra money, and you can do those repairs or updates after closing. That's it. That's all you say.
That's the whole script.
That's the whole script. Now,
say it again.
Okay, so Mr. and Mrs. Jones, congratulations. Here's your pre-approval. If you find a house and it needs a little bit of repairs or updating, let me know. I could roll in the extra money, and you could do those repairs and updates after closing.
So I love it. I love it because you talk about after closing, which is like, hey, buy the house, get the close, because some people worry about that, and there's some demystifying that needs to happen on these deals. You also say roll in the cost. You don't mention renovation. You don't.
Exactly.
You're not. You just tell them the truth, which is we can do it in one loan.
Yeah, don't overthink it. Right. We'll just whatever you want to do, we could finance it in, and you could do it. You could do that work afterward, and doing that over a span of years. What I noticed, finally, took me a while to pick up on the responses, but what I noticed is there were really two responses that the customer would give. The first one would be, "Okay, great.
Yeah, I'll keep you in mind."
Yeah, exactly. But it was the second response, which was anything other than okay. If they asked, "How does that work?" or "Wait, can you explain that to me again?" or I don't understand, or as soon as I got anything other than okay, I would deep dive on them right there. And I would ask them, "Have you seen a house that you liked that needed some work?" And I would say 2/3 of the time, the answer was yes. And then I would find out about that house. I would get off the phone. I would call that agent, and I would say, "Hey, did you know that Mr. and Mrs. Jones liked that house, but they didn't have the money for the updates, or they were concerned about how dated it was?" And it really allows you to bring extra value to those agents.
Oh, I bet, because you're putting together a deal for them,
and potentially convert it faster. Now, if that property's still available, you're helping the agent complete it.
Well, you got to imagine, right? If there's a property that needs a little love, it's probably not moving exceptionally quickly unless in a key neighborhood, key market, and but those things tend to sit.
Correct.
So, do you have another script for a loan officer to a customer?
That was to the customer?
Yeah, that was to the customer.
Yeah. So we have one that goes to the agent as well. Almost the same.
Yeah, let's hear it.
And I would say, Mr. and Mrs. Agent, here's their pre-approval, because we deliver it to them and we let them know, and I let them know. Say, listen, when you're showing them a house, if you get the sense they don't like something, there's something that's wrong with it, they want to update or anything, let them know that we could just roll in those repairs. Just let them know. And the visual there is that, this customer walks into a house, sees a kitchen from the Brady Bunch, turns to the realtor and says, "I don't like it."
Yeah,
I want that agent to be there and say, "You know what?
What don't you like?"
Exactly. And Milton said, we can roll in. You can upgrade those cabinets and we'll get you new hardwood floors, And then once that customer hears that and remembers that I said the same thing, that's how you're able to convert your pre-approvals faster.
Okay, so I'm in the game now. I got the pitch, I got the angle, got the script, but we still have to demystify the process. There's still agents out there who would see a 203K or a reno deal come across and be like, "No, thank you." They're afraid of it.
Correct.
They think it's going to blow their deal up.
Correct.
And so let's get real. What does blow the deal up? What does take a long time? How do you demystify this and provide clarity into the process So what do you say to people?
Well, listen, as far as the realtor's reality, right?
Yeah.
So other than mentioning renovation on the contract, the only other thing they need to do is give access to the property for the contractor. The contractor, in certain markets in the country, that tends to be the biggest delay, right?
Good. So yeah, let's break it down. So functionally, for someone that's never done a renovation loan before, right? We already kind of hit the big point that you need to get a subject to appraisal, and it's subject to the future improvements. Mm-hmm. So if I'm Johnny homeowner or home buyer, and I want to do a new kitchen, new bathroom, those are my improvements. What do I have to do to get my renovation loan lined up?
So everything normal, just like any other mortgage, any other loan.
Yep.
But in addition,
same documentation,
same
requirements.
Everything, right?
Yep.
Same requirements. You're going to get a contractor's bid. Just the contractor that you choose to use, we need a copy of that bid. Because when we order the appraisal, we're going to give the appraiser that bid, and we're going to ask the appraiser to give us the future value based on those repairs.
Based on the bid.
Correct.
So let's oversimplify this. How do they find the contractor?
They can pick it. We don't recommend contractors. They're free to pick any of them. A lot of times I'll have customers go to Home Advisor or Angie's List and pick a contractor, but they pick whoever they like. As long as they have insurance and they're licensed and they're in good standing, we're good.
So pro tip for all you real estate professionals listening right now, pay attention, because if you got a house that you know is going to need some love, you know it, then go find some contractors who are your friends, who are in your community, who work with you alongside you. Get them ready to go, because when that home buyer walks in and they go, I need a new kitchen, you go, I know. Right. I'm listing it. You definitely need a kitchen. Here's Billy Bob, the contractor. This is the cost for a new kitchen, and basically that part's done at that point.
Yeah, we get the bid, we order the appraisal, and we move along just like everything else, right? We want to make sure that the appraisal, if supports the repairs that we're doing. But here again, on a 203K, it doesn't necessarily have to.
Because you got the 110 variance.
Exactly.
So I just want to make this really simple. It sounds like the only thing I need as a home buyer in order to get a renovation loan, besides the normal documentation I'm going to provide, is a bid for the work I want to have done, so that you can order appraisal and get a subject to value based on the bid.
Correct.
So I just need a bid.
Correct. So we don't really.
I know that sounds simple, but people are overcomplicating this.
Big time. So if somebody's buying a home for $450,000 and they're doing $30,000 in work, let's just say, we're not asking the appraiser to tell us if it's worth $450,000. We want to know, is it going to be worth $480,000?
Correct.
That's all.
Yeah.
Very simple math. Yeah. That's it. And
then okay. So now I'm in escrow. I got the bid. The appraisal comes back subject to. Mm-hmm. What other things happen on let's get real tactical on the operation side? What other things have to happen for a renovation loan to close?
So other than your normal loan process,
underwrite, right, stuff that we do all day long.
That all stays the same, but we have our renovation operations team, and what they do is they reach out to the contractor and to the homeowner, to the client, and they basically execute the additional disclosures, get those e-signed. They ask the contractor for a copy of their insurance, their liability insurance.
Yep, they track down all that stuff.
They do it all, right, and they put it all together. They clear those conditions. They update the numbers once the appraisal comes back, so we can make sure we have the final figures, and that's it. And I don't mean to oversimplify it, but I just think that for so many years, so many people have tried to make this thing like magic, and it's really not.
Yeah.
It's really simple.
Yeah.
And I get that a lot. Once people are trained and they've closed a couple, they're like, this is really simple. That's what they tell us.
What happens after the close?
So
now the realtor and the seller are fine.
Right.
They're done. But just to keep the story going, what happens to the home buyer now?
So they start work. We Loan Depot controls the funds, and so as they need money and as they do work, we disperse those funds.
So this is a cool point that I've heard you sell as kind of like an asterisk to if I'm doing a refinance, mm-hmm. and I'm going to do a cash out refinance mm-hmm. for my house, mm-hmm. but I know it's all going to be for home building. It's like reno stuff. Mm-hmm. Would you recommend a cash out refinance or a renovation loan?
Well, I would recommend a renovation loan.
So why?
Well, I just think that it's a smarter overall option, and it would be, I think would put them in a better situation.
Yeah, really. I've heard you explain how when the lender controls the disbursements of funds, you actually get some protection.
Always, yeah.
Because if the contractor, and there's always horror stories about, you pay a contractor, they disappear, they go away, but when the bank's controlling the disbursements, you actually get a lot of protection on that.
Yes, and when you're doing a renovation refinance, the appraisal, because it's based on the future value, it's based on the work that you're doing to the home. So you could find yourself in a position, depending on the work that you're doing, where you can access maybe more money, right, to do more repairs because the appraisal comes in higher, giving you equity. Or perhaps you're able to remove mortgage insurance.
Dude, that's a great comment. Of course, that's why it makes some more sense to look at renovation loans instead of cash out refinances, because you're gonna get a renovation loan based on future value.
Correct.
You're doing a cash out loan on existing value.
Correct.
So you might need that future value to access more equity to do what you want to do.
And that's been that's worked wonderfully for our VA renovation loan for our veterans.
Yeah, I want to unpack that too. I definitely have time to talk about VA renovation because I'm very passionate about that. So I lost my train of thought here. Let's go back to your presentation with the real estate agents. Mm-hmm. You're educating them on the right questions to ask. You're queuing them up. You're demystifying the process. Mm-hmm. What else should they be aware of or afraid of, or did we cover it all? Well,
listen, I mean, there's other scripts and tips that I give both the agent and the loan officer, and it's basically to let the customer know that they need to stop trying to find the perfect house. Right?
Oh, that's great. That's a great message. And 100%.
Yeah, we tell them, stop, find the perfect neighborhood, find the perfect school district, subdivision, where you want to be, and let us make it the perfect house. Because back to those TV shows, which I love, I watch them, but these people think that home exists and that's what they look for, and they want to find it in that subdivision or in that neighborhood. Yeah. And when they can't, they stop. And we got to let them know that, that doesn't exist. Find the perfect neighborhood, we'll make it the perfect home. Once they understand that, that's, again, how you're able to convert these transactions and bring it home. Yeah.
You know what else I remember that I think I want everyone to hear as another pro tip? When you are thoughtful and you ask the right questions and you find out that you made a really good comment earlier that sometimes with a lack of inventory, people go out and they get discouraged. Mm-hmm. They can't find what they want. They end up coming back home. And if you were smart as the loan professional, if you talked to them about their needs and their wants, and you told them about renovation financing and how it works, they might go back home, look at their existing home, and go right into a renovation refinance.
Yeah, there you go.
I mean, I'm speaking from experience, right? Yeah. I'm looking at maybe buying a different home, and I'm looking around, and I'm like discouraged. Everything is either super priced up, or it's and I'm not willing to kind of go there yet, or if there's not enough inventory. And then I come back and I look at my house, and I'm like, well, maybe I should just do work here. Yeah, exactly. I mean, it's great. No, so you're getting business everywhere.
Yeah,
and that's why I joke too about the renovation design studio concept in open houses, because everyone has looky-loos from the neighborhood that comes in because the house is open. They want to see what's going on.
Correct.
And then if they see the design studio, they go home and they go, honey, we should get a new kitchen. I just saw this design studio that Milton had up, and I want to do it here.
Correct, yeah.
Oh, man, the opportunities just seem like it's endless.
Yeah, and to that point, one of the other things we've communicated to loan officers and agents, realtors, is that, after the construction's done or after the rehab or renovation's done, a lot of customers, they want to have an open house. People love showing off their home, so they invite their family and their friends, and they have an open house. And you need to be there, because the first thing your customer is going to do is grab their family, friends, walk them into the kitchen and look at this kitchen, and then point and say, "This is the guy who did it for me." I mean, it's a great way not only to show respect to your customer, but also to pick up more business.
I've talked a ton about housewarmings, and there's absolutely, whether it's a renovation refinance or obviously a renovation purchase, to celebrate that new house with the homeowners and be there is gold.
Yep.
So, okay, let's talk about, there's different types of renovation loans. You have conventional renovation loans. You've got 203Ks, and you got VA. Mm-hmm. We talked a little bit about 203K, the variance that kind of sets it apart. But what are the characteristics of a conventional renovation loan for somebody who's never? I mean, if you're a loan officer who's brand new, right? Like I'm just learning what renovation is. Let's start there.
Conventional loan, guys, is basically, it's a Fannie Mae home style is what it's called, and it's a straight conventional product where we allow you to finance the purchase and the renovation. On a 30-year fixed loan, everything is exactly the same. It's a straight conventional loan. We're just wrapping in that additional renovation.
And we're lending off the subject to value.
Correct.
So whatever the subject to value is, then you look at the down payment requirements, the guidelines are all the same.
Exactly right.
Rock and roll.
Exactly. So again, if the purchase price is $450 and they want to do $50,000 in work, your acquisition's $500. So your down payment, your loan amount,
your 10% or 20% down has to be off the $500.
Correct. Yep. Off the total, the combination of the two, as little as 5% down.
That's right. That's right.
Yeah. And
by the way, investment.
Investor on a single family.
Let's do it. So investors, because there are people that are investors.
There is.
And when they buy houses, they likely want to fix them up a little bit before they put a renter in there.
Correct.
So how does the investment rental
So
work?
the investor renovation is 15% down is the minimum. So it's an 85 loan to value of the total, right? Purchase price plus total rehab. 30-year fixed. They have there's no prepay or restrictions. They can do whatever they want. And, I have investors that are customers, and I've explained to them, I say, guys, you got to stop looking for those homes that you're going to go buy, you're going to put 20 grand into and flip it. Those days are over. You have to really find that ugly house, right? And that needs an addition, that needs some major work. That's where the money is right now.
Yeah.
Because those are the homes that your home buyers that are going to occupy, they're just driving right past those. They don't want to have anything to do with those.
No. And now for 15% down minimum, you could build in the upgrade costs and you're rocking and rolling.
Correct. And the only other option these investors have is hard money, which isn't a viable option.
Yeah. Okay, so conventional is awesome.
Yep.
VA. VA.
It's our pride and joy, Alec.
So give everybody the background on this product. How did it come into existence to the best of your knowledge?
So, back, I would say 5 years ago.
Yeah.
Loan Depot was the first company to really roll this out. I mean, we believe we have a moral obligation to our veterans.
Yeah.
And
go ahead.
Yeah, they were in a tough spot. They were finding homes that they wanted to buy, but the homes needed work, or there was work that they needed to do to the home, and they couldn't write an as-is offer, because everyone needs to remember all renovation loans are as-is offers. It doesn't matter what condition the property's in. So our veterans were getting priced out, right? They couldn't make a move. And so what we did is created a VA renovation loan that at the time was great. I mean, we hit the road with it, promoted it, did wonderful.
And it was kind of mirrored a streamline, right?
It was
35,000 cap.
Correct. Nothing structural, and 90 days to complete the work, right? And it was great, but it had those limitations. And then last year, we really revamped it, opened it up, set it up to mirror the 203K. So now you're limitless. I mean, you could tear a house down and build a brand new house if you want. And you can go exceed $35,000. You can go to your limits. And as you know, with the recent change on the VA loan limits.
No loan limits.
Yeah.
I mean, you're talking a massive renovation loan.
Right. Which is wonderful. And we've done quite a bit that make the home accessible for disabled veterans.
Yeah, so this has always been really heavy on my heart, and I'll share a story for everybody paying attention. I took this out of Milton's book. During every new hire orientation, I ask everyone in the room. We had 100-something loan officers, last month, a few weeks ago, and I've done this for like 7 years. I ask everyone in the room who's served to raise their hand. And you're going to always get a smattering of people who've served. It's amazing, right? So you get to cheer them on and thank them for their service. And then I asked to keep their hands up, and then the rest of the room, if you had a parent or a child who has served, so like a direct relationship to someone who has served, raise your hand. Guys, every time, it's like 70 to 80% of the hands in the room go up. And this is across the country. These are people from all over the country, every demographic, and we are all touched by vets. They have impacted our lives no matter where we live or what we think. We're related, we're connected to vets. And Milton, when the VA renovation loan first came out, even when it was $35,000, the passion, the excitement I have around educating veterans who don't know it exists. And now that it's unlimited.
Correct.
God forbid that you have a disabled veteran, but the greatest loan in America is a loan for a disabled vet at 100% financing with all the renovation costs built in to make their home handicap accessible.
Exactly.
It's the greatest loan in America. And when I ask everyone in the room, how many of you guys have veteran nonprofits in your community serving veterans? Are they educating the vet? Now, there are wonderful nonprofits who help disabled veterans. So this isn't like, the miracle cure-all and, oh my God, there's no resources for disabled vets. Of course there's resources for disabled vets. But this is also a resource for a disabled vet. And they need to know it exists. Because if they're not able to access other resources to help them, and this they don't even know this is here, it makes me pissed off.
Yeah,
I get mad, and so I encourage loan officers, if you're listening to this product, I mean, you have a moral obligation to go into your community, into your veteran nonprofits, and educate them that they have a resource They have a tool. Doesn't mean they have to use it, and it's not. And mortgages, it's not for everybody, guys. We know this. There's an underwrite. There's a whole process. But man, that's an incredible deal.
It truly is. And I tell people, we've all been in those situations where you've been at a closing and you have emotional customers. They're buying their first home and they're there, and they just the emotions, happiness, right? And you feel pride and you're happy that you're able to do this for them, and they're emotional. You do a VA renovation loan for a disabled veteran, you'll be the one that's overcome with emotions, right?
Kidding.
When you'll be standing in the corner looking, and it's a special thing, man. It really is, and I'm really proud of it. I love it.
Yeah, I mean, I just want to encourage loan officers out there that this product, I mean, you should be screaming it from the mountaintops. You should be educating everybody you can on this deal. Because it's a gateway product to everything else. You'll get other loans. I mean, how many times do you see loan officers run seminars on Reno, and they get tons of conventional loans?
Exactly.
Education is education. That doesn't mean you're only going to do 2-3K loans.
That's correct. And guys, that's how I kind of
built
made
your
it
business.
Work. Right.
Yeah.
I use renovation loans, and I want you to use renovation loans to get non-renovation business. The renovation loans will come. It's not about the loan. It's about the value proposition the loan gives and what it brings to the relationship. So, and that's how you have to approach it.
The other thing that I forgot, that's a kind of a byproduct of renovation, is you're actually increasing the value of the neighborhoods.
You are.
Well, I mean, this is important.
Yeah.
Like, you're actually bringing the value up for all the neighbors there. I mean, that's epic. And if you're a real estate professional or a mortgage professional and you're revitalizing a community, man, that's badass.
It is.
That's really cool.
That is pretty cool, yeah.
You can have pride, like driving through the neighborhoods being like, I'm bringing the value up of this community.
Right. When that neighbor orders an appraisal and that appraiser's going to mention, this comp was, rehabbed and so on and so forth. So, yeah, absolutely.
Okay. So let's go back for some tips and tricks. Let's get real tactical for some loan officers here. You gave some good scripts. What else do you cover in your seminar, in kind of your presentation? What have we skipped over?
Well, you could use renovation loans for future listings, right?
Go break that down.
So basically, we tell our realtors, our agents, that if you're on a listing appointment and you see a house and it needs some work and you think the numbers will work, right? Where maybe they could do some work and list it at a higher price and net out a little bit of money, you can absolutely do a renovation loan and for a future sale, a renovation refinance.
That's really smart.
Yeah.
Because there's a lot of agents out there who are looking how to improve their listing presentation conversions. And so if that's you, or if you're a loan officer, you want to educate some realtor partners, when they go on a listing appointment, they should encourage that future seller, to consider a renovation refinance.
Yep.
And make their home beautiful. And let's say they put $50,000 into it. Well, they might net 80.
Correct.
So, and as a real estate professional, you know that. You know the value of, like, hey, if we do new kitchen, all this stuff, I can sell this for more. And so, man, that's a great education tool.
And then you're locking down a seller that you're doing a refinance for, and you're going to do their purchase down the road.
Heck yeah. I mean, you're going to get both loans for sure.
Exactly.
But this is really cool because the seller, the complaint is, I'm selling my house. I don't want to put more money into it. Well, if you finance it, it's just about carrying costs at that point. That's a different math education process. It's not about you need $50,000 to do the rehab. It's, hey, the carrying cost of this for after completion is probably, we're going to sell it in 3 months. So your interest cost for 3 months is this. Let's go.
Correct.
I mean, it's much less.
And I'll add to that, in certain parts of the country, Alec, there's a lot of unpermitted additions.
Ooh.
Okay.
Yeah, we got to break that down.
Yeah. So there's people who put unpermitted additions onto their home, and now they want to sell.
Yes.
And you can't get value for that.
No.
So that's
no,
where
you cannot.
Yes, you're right. And but we can finance that for either the existing owner or the one buying it, and finance the cost of making that addition legal.
Ooh, let's say that again. That's because the seller, like, let's pretend the seller doesn't want to do anything.
Okay.
Because they're selling.
Right.
Whatever, it's my unpermitted ADU or whatever it is. So, but the buyer, through a renovation purchase, can get that all done before they close.
Well, we would finance the cost of making the addition legal into the loan.
Into the loan.
So then they could do it afterward.
That's killer.
And then the appraisal would be based on that addition being legal.
That's killer.
Yeah.
That's a great pro tip. Man, I hope people pay attention to that one. That's gold. What else you got?
So, guys, I would tell you that you want to understand that customers by location, right? That's how they shop, where they want to be, the neighborhood, the school districts, like we said. Yeah. And so we need to put them in a position to understand that if they do not find something in their price range, that they may be able to find something for less that needs work, right? Mm-hmm. So I get it. They're looking for a home that doesn't need any improvements, right? Their dream house, and they're looking at $500,000 and they can't find it. Well, maybe you could find that $400,000 house that has some mold damage, or you know what I mean, needs that $100,000 in work, and they can make it perfect. So just remember, they buy location, and we got to work within that sphere.
So let's recap some of the big takeaways here. Okay. So let's give it to them. So let's give them the script again. The script again for a home buyer
is so basic
at time of pre-qual.
Yes.
Okay.
Yeah. The script to the home buyer, Mr. and Mrs. Jones, congratulations. Here's your pre-approval. If you find a house and it needs a little work, you want to update or repair something, let me know. I could roll in the extra money, and you could do that work after closing.
Killer. Okay. So we landed that. Let's hit the variance again, because that is a deal saver.
Correct.
So let's break down how that works to let everyone really understand it.
So basically, guys, this only applies to a FHA 203K. You can go to 110% of the subject to value.
God, that's killer.
So if it started out as a 203K, or if it started out as a 203B. And
when you don't say 203B, bro. So no one knows what that means.
Okay. Sorry.
You just mean an FHA loan.
Yeah, an FHA loan. I dated myself. No. Sorry, brother. So
203B. So, everyone's like, what? FHA loan, guys.
So FHA loan. And the appraiser comes back calling out repairs, right? Yes. You can finance those repairs and go up to 110%.
So that's killer, guys. That's nugget number 2.
Yeah.
Nugget number 3, conventional.
Correct.
But I like the investment kick.
Correct, yeah.
15% down.
Correct. Of the total. Mm-hmm.
Of the total investment reno. That's clutch.
Right.
And then what's the next?
I would say, the script to the agent is letting them know that, Mr. and Mrs. Agent, here's the pre-approval for Mr. and Mrs. Jones. If you're showing them a house and it needs some work and you get the sense that they don't like it, or there's something that turns them off, let them know we could finance that in. Now, obviously, at that point, with that agent, you're going to make a slight variance for agents that you have a relationship with, but it's wonderful for your first-time agent, right? The agent you've never spoken to, okay? The client came to you. They already had an agent. Now I'm picking up the phone, calling them, and they're going to ask questions as soon as you give them that script. And that's how I explain it to them. And you tell them, well, they're going to say, well, do you mean a renovation loan? I'll be exactly, but it's an as-is offer. We can convert it quickly. We'll finance those repairs. You'll be able to convert this customer. I mean, there's just so much you can handle.
That's nugget number 3.
Correct.
Nugget number 4 that I pulled out of here is the fact that if you do educate your buyer on rolling in the cost and what renovation can do, and they don't find the home, you're likely going to pick up a reno refi.
Correct.
So there's the next one. Then we've got the VA renovation loan, and the power of that with our veterans in our communities, the power of leveraging that with our VA nonprofits is just a gold mine, and it's under leveraged and it's underserved and it's just full of opportunity. And that's another gold nugget for everybody. Yeah. And then the design studio.
Correct.
The design studio is putting these up in these houses in your communities, guys, we all have dated communities. We do across the country that just are old. And so putting design studios up in those houses and door knocking and letting people know there's going to be a design studio in and everyone's confused and maybe bringing people in, man, you're going to farm that. You're going to get a ton of business from that.
And I'd like to add one more nugget. So we're starting to see a trend moving forward. It's called age accessible housing, where you have people who are retiring but not moving out of their home. But, they want that addition. They want that master bedroom and bathroom on the first floor. Man. That's going to be a big trend 3 to 5 years from now, guys. Be mindful of it and be ready for it, because there's going to be a lot of seniors that are going to need that help, right? They can't navigate up and down those stairs. They want a ranch style, but they don't want to move.
Yeah, they like
Exactly.
Man, that's just like, how do we continue to educate our past customers on that stuff? Because those are our past customers.
Correct.
Sitting in those houses.
Correct. Yes.
That now want to do something different, and you need to educate them. Man. All right. So, Milton, thank you, by the way. This has been like just gold nugget after gold nugget. Like I'm imagining people just pulling these things out and radically enhancing their business. So we're winding down. What advice do you have for an originator in 2020? Whether they're seasoned, they came through the crisis, they're ready to continue to evolve into the next roaring 20s, or they're newer to the industry and newer to doing loans. What advice would you give them around renovation loans?
Guys, like we said in the beginning, how we opened, you want to use it as a unique selling proposition. Don't overthink the actual renovation or the word
Smart.
Renovation. Don't use words that could overwhelm a customer, construction and renovation and rehab. I mean, you got to keep it simple because it's really not that hard. And so just open up that dialogue with the customer, talk to them. And if you see they're having trouble finding a home, or if you learn that, the house they currently live in, their family's grown and they need to build out,
Yep.
There's really a lot of opportunity. Embrace the option and leverage it as a tool. And like I said, use it to get non-renovation business. Discuss it.
Yeah,
and that's
it's a
really
gateway
it.
product. You're going to get
exactly
non-renovation
right.
business.
Exactly.
And the last thing I do, guys, I want to encourage you. First of all, hook up to Milton online. He's always sharing great stuff and really pushing the reno world forward. So thanks for all you contribute there. And I just want to land this whole episode with this, guys. If you're a loan officer in your local community, you have a tremendous opportunity to be an educator on this wonderful product. To the real estate professionals, to the community there, and to your veterans there. You have an unbelievable opportunity to be an incredible educator and absolutely, in my opinion, transform your own business in the process. I mean, it's clear in your history as an originator, it transformed your business, and there's nothing stopping you guys. All the resources at your fingertips. So go and take on the world and educate our vets on this incredible product. Anything else, Dad?
That's it.
We nailed it.
We did.
All right.
Thank you,
brother.
brother.
You guys for tuning in.
Thank
By
you.
the way, reminder, please, if you stayed through the whole thing, man, I love you. You're like the true fans, because everyone else is just going to listen to the first 30 seconds and peace out. That's okay. It's okay. I love them too. But thank you for staying tuned the whole time. Please subscribe and share and drop a nugget in a comment. Let me hear what stood out for you guys. It helps us get better. Thanks. Have a wonderful day. We're out.
Thank you.